Okay, so hey guys, sorry, I've been kinda sick. Anyways, I hope you guys are doing okay. So, as I promised, I'll always be going over the trades that I execute. So, yesterday I took the trade on SD card. So, I'll just go through it and show you guys or explain to you guys why I took that trade. So, today I won't be trading, as I said on the group. Today I won't be trading since it's Thanksgiving holiday in the US. So, yeah. Uh, as usual, everything begins on the daily time frame. That's why I usually begin to build my thesis on the daily time frame. So when I'm on the daily, the way I explain on the gold trade is that I just try to see where breakout traders were triggered in and what traders are in on the money currently, and that's basically it. So for instance, the last time we broke structure was here. Okay, so what I do is I now draw the high and the low of that bar, of that candlestick, or of that daily range. I mark that daily range that particular day that we broke out. So what this tells me is that now breakout traders are in. And if this market comes back and breaks the other end of that range, then as I said, I'm starting to think that maybe we might be heading back to the other end of the range. Okay, so breakout traders were triggered in here on this particular day. Then the market gave a pin at the high of the month. Then I was this okay, yeah, we had a market that closed in breakout, again closed in breakout of that particular day which breakout traders were triggered in. Then we had a pin. The market went up one more time with one higher close, and then it gave a first trade day or a market that has closed in breakout. Inside the breakout, if I extend the line, you see we closed inside that breakout. So that means that the breakout traders who are triggered in at this level are now trapped. Higher level longs, they're now trapped at this point. And so since we did this, my only thesis is we might be heading back to the other end of that range. And so what happened? The market closed in breakout one more time at the low of the month. I think this was the lowest close of the month so far. And then the market just went into a trading range. And then the next time we had a break in structure was here. What day was this? The 20th. We broke. So what this tells me again is now breakout traders are again on the inside. So I again mark those levels. The daily range, which is just the same high with that. So breakout traders are in here. But remember, these traders that got in at sales reversal at the high of the month, they are still in, and unless we break that level. So what does the market do? The market pushes up one, and then the market goes up once again and pins the high of the daily range that we marked, that broke the other day, the 1 2 3 4 5, on the 5th day of the month. And then the market gives us a signal day, which is an inside day. So that is just technically a what? A coil, followed by a day zero, that is a first red day. So you see, we have a first red day at the high of the month. Inside what? The day that we broke back inside. So this is telling me that this breakout, let me just extend the line. This breakout here has still failed unless we break the high of this day. Then I will know that now maybe the buyers may be coming in. But now the sellers who sold at the high of the month are still in. So when I had this first trade day at the high of the month, after this breakout with this this day over here, I now knew I'm looking for a selling opportunity at the high of the month. Once I've built my thesis that way, the only thing I do next is now to go on the daily, on the 15-minute. So when I'm on the 15-minute, as usual, I only buy low and I sell high. Now, on that particular day, what does the market do? The market breaks the low of Tuesday here. Now, this tells me that breakout traders are triggered in. Now, the daily breakout traders are triggered in. And if we pull back, as long as we are inside that level, they are trapped. And that is why I would only execute a sell if we are either below this level or near that level, so that I may be sure that maybe those breakout traders, they are starting to maybe add more positions, because now they just see this as a breakout pullback and then they add more positions. So that was my thesis. So when the market broke out, you can say it's a lower low, but I saw breakout traders being triggered in. Okay, and then the market pulled back inside. So at this point I was like, if this market gives me a sell setup, then it will just be a what? A low hanging fruit. Okay, so as usual, I only trade New York session the last 2 hours. So I come to New York session, I mark the high, which is that one. The high of Asia, which is that one, and the low. I just mark the high and the low of the day that way. And then what does the market do? The market pumps down, then we immediately start, the market dumps and then immediately start pumping up back into the what? The closing price. Now, when I come, the only thing I do now is to mark the low of the first hour and the high of the first hour. Okay, I think it's somewhere here. Yeah. Now, as second hour begins, we break above the first hour high here, and then we pull back inside. So we have some sort of a peak formation. Okay, we have a peak formation at the high of the session at the closing price. But remember, when the market pumped up, we pumped up inside this daily low, and we never came back to engulf it. So I told you guys from the gold video, I only have 3 entry models: pump coil, engulfment of hourly level, or a dump coil, engulfment of hourly level, or a pump and then engulfment of a level inside the 20 period EMA, which was not yet engulfed during that session. So you can see we pumped up, and immediately the market pulled back, pushed up higher one more time in 1, 2, and 3. I think you've seen them. 1, 2, 3, back to the closing price. Dumped down, pushed back up again, and at this point, we have the deadline. So the only thing I was waiting for is engulfment of a level, which we had the engulfment here, this candlestick here. Engulfment of previous day's low, this candlestick. So you see, I'm being filled at that level. Why? Because the breakout sellers, they are no longer trapped. If it were that this market was inside, I would not be taking sales. I would only take near that level when I am sure they are not trapped. So my entry obviously was there, here. Stop loss, as usual, as I always say, 1 bar stop there. And remember, you are in line with higher time frame traders for a low hanging fruit. So to let the market run, and that's basically it. Normally, when I always say, when you are in trade with the higher time frame traders, there is no need to okay, if you want, you can close partial, but for me personally, I don't. Why? Because you see, if you look at this market, this move originated from what? 00, and then there's a 00. So you are selling at the move started at the high of the box, heading to the low of the box. So this is just a hold till close, and that's exactly what I did. So that was the only trade I took yesterday. Today I'm not trading since it's a holiday, and then Friday we'll see what happens. Thank you.